Good morning, everyone. Today we'll be starting our discussion relating to the amendments which are applicable for September 25 examination. Basically, the amendments which are made by Finance Number 2 Act 2024. Those amendments are applicable. Besides this, certain notifications and circulars have been issued. We'll be discussing the same. Okay. So first is relating to what the amendments in supply chapter. So the thing is, under supply, what is Schedule 3? What is Schedule 3? Schedule 3 relates to those transactions which are not regarded as what? Supply of goods, which are not regarded as supply of services. Now here, two more transactions or activities have been added which are regarded neither as supply of goods nor supply of services. One is, say, when insurance is done. When insurance is done, what they do is, if it's a big insurance to be done, then the companies, they enter into an agreement. More than one company enter into an agreement to cover the risk. One is the lead insurer and other are the co-insurers. So basically, when lead insurer is charging the premium, GST is paid on the same. When the insurer is charging premium to the insured, full amount of GST is paid. And then that premium is, say, apportioned between what? The co-insurers. So that activity of apportionment of co-insurance premium by the lead insurer to the co-insurer, that won't amount to what? That will not amount to supply of goods or supply of services, and same would not be liable to GST. So basically these two activities have been added. Number one is what? Activity of apportionment of co-insurance premium. Activity of apportionment of what? Co-insurance premium by lead insurer to the co-insurer for insurance services which have been jointly supplied by lead insurer and the co-insurer to insured in co-insurance agreement, subject to the condition that lead insurer pays GST on the entire amount of premium paid by the insured. So for example, here ABC Limited gets the insurance done from PQR Insurance Company. Now here they are charging, say, a premium of 25 crores and GST has been charged on the same. Okay. Now what this PQR Insurance Company is saying, that we are having, say, this is a big insurance risk here. So they entered into an agreement here, and these, all the three insurance companies, say TT or JJ Insurance Company, they are covering that particular assets or properties or whatever the case may be. Now here what happens is, PQR Insurance is a lead insurer and these are what? The co-insurers. So here the activity, they will be charging and then they will be paying the, basically the premiums also, portion of their premium to the co-insurer in accordance with the agreement. So this apportionment of the co-insurance premium by lead insurer to co-insurer, this activity of apportionment of what? Co-insurance premium by the lead insurer to co-insurer for insurance services jointly supplied by lead insurer and the co-insurer to insured in co-insurance agreement, subject to the condition that lead insurer pays central tax, state tax, union territory tax and integrated tax on the entire amount of premium which is paid by the insured. So basically that will not be regarded as what? Supply of goods, not, say, supply of services. And the second one is, say, the services, that is reinsurance services are covered. That is what? Reinsurance services. They are saying that what is happening here is, say, an insurance company is there. Insurance company is there. Basically, it has entered into an agreement with a particular, say, insured. And part of the risk is transferred to another insurance company. This is a case of what? Reinsurance. Now this is a insurer. This is reinsurance done. Now this reinsurance company will be what they are getting this insurance done. So basically the reinsurance company, they will be charging what? The, their premium, and GST will be charged on the same. And to meet out the administrative and other expenses, they will be paying what? Ceding commission. Ceding commission. Either the premium is reduced by the amount of the ceding commission. Whatever premium is paid, that is say reduced by the amount of the ceding commission. So basically here they are paying the premium. The ceding commission is say reduced. And but that this will not be liable to GST provided on the entire amount of reinsurance premium GST has been paid by the reinsurer. So basically services by the insurer. Now they are saying services by the insurer to the reinsurer, for which ceding commission, for which was ceding commission or say reinsurance commission is deducted. Ceding commission or reinsurance commission is deducted from reinsurance premium, paid by insurer to the reinsurer. So they are charging say 25 lakhs premium from the insured. GST has been charged on the same. Out of this 25 lakhs, they got their further risk covered by the reinsurance company. So basically, reinsurance company is charging 5 lakh rupees as the premium, and GST on 5 lakh rupees is levied at rate of 18%. Now what they are saying is this this insurance company will be paying to the reinsurance company this much amount of reinsurance premium on which GST will be paid. But they will be this reinsurance commission company will be giving what? A percentage of the commission. Percentage of commission, that is known as ceding commission. Because all sorts of agreements, risks, etc., whatever expenditure is there, administrative expenses, etc., that is made by this main insurance company. So to meet out those, they are giving ceding commission. So even if the ceding commission is deducted from the insurance premium, even if the ceding commission is deducted from the insurance premium which is paid by insurer to the reinsurer, GST in that particular circumstance of the ceding commission, the same would not be liable to GST provided on the entire amount of this premium GST has been paid. So basically services by insurer to the reinsurer for which ceding commission or reinsurance commission is deducted from reinsurance premium paid by insurer to the reinsurer, subject to the condition that GST is paid by reinsurer, GST is paid by the reinsurer on gross premium payable by insurer to the reinsurer. On the entire amount of premium, gross premium, GST has been paid, inclusive of the ceding commission or reinsurance commission. These two activities have been added here. Remember, whatever is in blue is made by the Finance Act 2025 that will be applicable for the students who are writing their examination May 26. We won't be discussing the same, okay? This we have discussed. Then relating to circulars also, certain circulars have been issued. Now first is about the GST treatment of vouchers. So basically now they have said the vouchers, either it falls under the definition of say it is coming under the ambit of money, or it may be coming under the ambit of actionable claims. If the same is coming under the ambit of actionable claims, money is not liable to GST as you are aware. So here actionable claims other than specified actionable claims other than say specified actionable claims are not liable to GST. Vouchers do not fall under the ambit of specified actionable claims because it's covering lottery, betting, gambling, casinos or online betting, online gambling, online lotteries. So here basically it's not covered under the ambit of specified extrable claims. So vouchers will not be regarded as money. Vouchers will not be regarded as say extrable claims. GST won't be leviable on issuance of vouchers. No GST is leviable. But underlying goods or services, on underlying goods and services which are provided through vouchers, GST would be. So at the time of issuance of vouchers, GST won't be leviable on those vouchers itself, because vouchers are neither goods. Vouchers do not fall under the ambit of services also. So here, whether transaction in vouchers issue was, whether transaction in vouchers fall under the category of supply of goods and or services. So basically it is clarified that irrespective of whether voucher is covered as a prepaid instrument recognized by RBI or not, voucher is just an instrument which creates an obligation on supplier to accept it as a consideration or part of consideration. And transactions in vouchers, remember, transactions in vouchers themselves cannot be considered either as supply of goods or as supply of services. Transactions in vouchers themselves cannot be regarded as either as supply of goods or supply of services. So therefore transactions in vouchers are not liable to GST. However, supply of underlying goods and or services, for which vouchers are used as a consideration or part of consideration, may be taxable under GST. Then what would be the GST treatment? What would be the GST treatment of transactions in vouchers by distributors or agents, or say agents, sub-agents, distributors or sub-distributors, agents? So basically where vouchers are distributed through distributors or say sub-distributors or dealers on principal to principal basis. The same would be covered in trading of vouchers, and vouchers are neither goods nor services, and hence no GST would be leviable. Where vouchers are distributed through distributors or sub-distributor dealers on principal to principal basis, same is covered in trading of vouchers and same would not be leviable to GST. Now in case if vouchers are given using these distributors on commission basis. So basically when vouchers are distributed, on vouchers GST won't be leviable, however on commission GST would be leviable. So in such cases distributors or sub-distributors or agent, they do not operate autonomously. Basically they do not own vouchers and they only act as an agent of the voucher issuer. In such cases GST would be payable by such sub-distributor, sub-distributor or agent acting as an agent of voucher issuer on the commission or fees or any other amount by whatever name called, basically as supply of service to voucher issuer. So they are what? Basically this is a voucher issuer, this is agent, and then they are providing to the voucher, say, procurer. So basically this voucher issuer is supplying vouchers to this voucher who is purchasing those vouchers through an agent. An agent is getting commission. On this commission, GST would be levied. On this commission, GST would be levied. Okay. Then then what would be the GST treatment of additional services? They are asking additional services such as advertisement, co-branding, marketing and promoting, customization service, technology support service, customer service, etc., provided either by the distributor, sub-distributor, or by another person to the voucher issuer against service fees or say service charge or affiliate charge or any other amount by whatever name called as per the contract or agreement between service provider and service recipient. That is a voucher issue. So basically, this is a separate service which they are providing on the service fees, service charge, affiliate charge. This is additional service which has been provided to the voucher issuer as per the terms of contract or agreement. GST would be leviable at the rate in the hands of the said service provider. So basically, if they are providing these services, okay, these services to the voucher issuer, then they will be charging the amount from the voucher issuer, and to the customer that has been provided, say, free of cost, then in that particular circumstance, in that case, whatever amount is charged on that GST would be leviable. So, once again listen, what would be the GST treatment of additional services such as advertisement, co-branding, marketing and promotion, customization services, technology support services, customer support services provided by either the distributor, sub-distributor, or maybe any other person to the voucher issuer against service fees, service charge, affiliate charge, or any other amount by whatever name called as per the terms, as per the contract or agreement between such service provider and service recipient, that is a voucher issuer. In such a case, that said service fees, service charge, affiliate charge, or any other amount for supply of such additional services to voucher issuer as per the terms of contract or agreement would be liable to GST at the rates applicable in the hands of the service provider. Now, certain vouchers remain unredeemed, that is known as breakage. That is known as breakages. So, unredeemed vouchers are accounted for in the statement of income. The same is called breakage. Basically, there is no supply of goods. There is no supply of goods, no supply of services on account of, say, such unredeemed vouchers. The amount retained for unredeemed vouchers by voucher issuer cannot be considered as any consideration for any supply, because whatever amount is retained by the voucher issuer on account of unredeemed vouchers cannot be considered as what? Consideration for supply, thus not taxable. Further, voucher is issued for purpose of redemption in respect of supply of goods and service, and there is no express or implied agreement or written or oral between issuer of voucher and redeemer for payment of any amount or charges by redeemer to the voucher issuer in case of, say, non-redemption of voucher. It will be considered as it cannot be considered as non-redemption of voucher by a voucher by a voucher redeemer tantamount to supply of service. So basically, it won't be covered under the activity of what? To tolerate, or say not to do any act under agreeing to tolerate an act or not to do an act. Basically, it won't be covered under the ambit of that. Therefore, it appears that the amount attributable to non-redemption of voucher, that is breakage, would not constitute monetary value of an act. It cannot constitute monetary value of an act or forbearance in respect of or in response to or inducement of supply of goods or services or both, okay, whether by the recipient or by any other person. Therefore, no GST would be payable on the amount which is attributable to non-redemption of vouchers. So, no GST would be payable in case of, say, non-redemption of the vouchers. That is in respect of voucher breakage. So, this is about vouchers. Basically, remember, vouchers are now neither coming under the ambit of goods nor coming under the ambit of services. Finance Act 2025 has also made amendment relating to what we have discussed about the time of supply of vouchers. So, the provisions relating to time of supply of vouchers, the same has been, say, vouchers either in respect of goods or in respect of services, the same has now been omitted by the Finance Act 2025. Then it has been for one more circular has been issued which states that no GST is payable. No, remember, no GST is payable on the penal charges. If they are charging, if regulated entities are charging any penal charges, if any penal charges are charged, okay, in compliance with the RBI directions, in compliance with the RBI directions. In case there is a non-compliance with the material terms and conditions of loan contract by the borrower, in that case these penal charges are charged. So if these penal charges are charged, GST won't be leviable on these penal charges. So no GST is payable on the penal charges levied by regulated entities in compliance with the RBI direction for non-compliance with the material terms and conditions of the contract by the borrower. Okay. So this was about the, amendments which will be applicable in the first chapter. In the first chapter, that is supply chapter. Now the second chapter is the charge of GST. So in the charging section, remember, in the charging section, what they have done is, earlier there was a dispute relating to whether leviability of GST and VAT on undenatured, extra neutral alcohol and rectified spirit used for manufacture of alcohol liquor for human consumption. So now it has been clarified in both section 9 and section 5 of the section 9 of the CGST Act and section 5 of the IGST Act that GST won't be leviable. GST won't be leviable on alcoholic liquor for human consumption. It was there also earlier. And GST won't be leviable on undenatured, extra neutral alcohol, undenatured, extra neutral alcohol or rectified spirit used for manufacture of alcoholic liquor for human consumption. So GST won't be leviable on, say, undenatured, extra neutral alcohol or rectified spirit used for manufacture of, say, alcoholic liquor for human consumption. GST won't be leviable on, say, undenatured, extra neutral alcohol or rectified spirit used for manufacture of the alcoholic liquor for human consumption. Okay, that is an amendment by the Finance Number 2 Act. It will be liable to VAT, not liable to, say, GST. One more important thing was what we have seen under section 9.5. What we have seen under section 9.5. 9.5, e-commerce operator is liable to pay tax. E-commerce operator is liable to pay tax in respect of services. In respect of services which has been provided through e-commerce platform. He is regarded as a supplier of the services which have been notified under 9.5. Now one service which has been notified under section 9.5 is supply of restaurant services. One service that is that is Zomato, Swiggy. These are the e-commerce platforms. So one service which has been notified is what? Supply of restaurant service. Here the e-commerce operators, that is Swiggy, Zomato, etc., they are liable to pay GST. Now supply of restaurant services, but which have been excluded. Other than services supplied by restaurant, eating joints located at specified premises. If the same have been located at where? Specified premises. So in that case, ECO won't be liable to pay tax. Here in this case, if these services are supplied by restaurant, eating joints located at specified premises, service supplier is liable to pay GST on the same. Service supplier is liable to pay GST on the same. Now what specified services means? Basically from specified premises. What specified premises means? Specified premises, earlier it was just simple that it was a hotel where accommodation room tariff was 7,500 per unit per day, above that or its equivalent. That would be covered under the ambit of, say, specified premises. Now they have already further made certain amendments in the definition of the specified premises. Specified premises for a financial year means, specified premises for a financial year means a premises from where supplier has provided in the preceding financial year. Supplier has provided in what? The preceding financial year hotel accommodation service having value of supply of any unit of accommodation above 7500. That means if your room rent, room tariff is above rupees 7500 per day, then that premises will come under the ambit of, say, specified premises or its equivalent. What equivalent here means, say in dollar terms. It is not rupees 7500 equal to. That is not the case. It's a US dollar 70, above 7500. That is that restaurant will come, and that restaurant, in case if services are provided, GST will be leviable, and the service supplier, that is the restaurant, would be liable to pay GST on the same. So specified premises for a financial year means the premises from where supplier is provided in the preceding financial year hotel accommodation service having value of supply of any unit of accommodation above 7500 per unit per day or equivalent. Number 2 is what? A premises for which a registered person, a premises for which what? Registered person. A premises which is registered for supplying hotel accommodation service. In case they have filed a declaration on or after 1st of January up to 31st of March of the preceding financial year, declaring that their premises are specified premises, or a premises for which a person is applying for registration has filed a declaration within 15 days of applying acknowledgement of the registration application, declaring that their premises are specified premises. Those premises will be regarded as specified premises. In that particular circumstance, GST would be payable by the restaurant service supplier, that is hotel only, and not the e-commerce operator. Otherwise, if it's not a specified premise, in that particular circumstance, GST would be payable by whom? GST would be payable by the e-commerce operator. Then under reverse charge mechanism, recipient of services is liable to pay tax. A very, very important amendment has been made here relating to, sponsorship services. Now, in case if any sponsorship services, it's provided, say ICI is organizing any event and ICI is, say, providing sponsorship services. So if the sponsorship services are provided by whom? Service supplier is whom? If service supplier is any person other than body corporate, okay, and if service supplier is body corporate, if service supplier is body corporate, then if recipient is, who is the service recipient? Service recipient is body corporate or, say, partnership firm located in taxable territory or other person. Now remember, whenever if a service supplier is a body corporate under sponsorship services, forward charge mechanism will be applicable. Whenever service supplier, that is sponsorship services, is supplied by a body corporate, forward charge mechanism will be applicable irrespective the service recipient is a body corporate or, say, other than a body corporate. If any person is there other than a body corporate, if any person is there other than what? A body corporate, okay. Now, in case the service supplier is basically any person other than a body corporate. If it's any person other than a body corporate and service is provided to whom? Body corporate or say partnership firm located in taxable territory. Then this is the case of reverse charge where say the body corporate or partnership firm located in taxable territory will be liable to pay GST. Say here, if Institute of Chartered Accountants of India is a person other than body corporate and say Make My Delivery Private Limited is say company which is sponsoring the event, which has been organized by what? ICI and receiving the sponsorship services from ICI. Reverse charge will be applicable and Make My Delivery Private Limited will be liable to pay GST on the same. But if it is any person other than body corporate or partnership firm, other person is there, other than that, the same will be covered under say forward charge mechanism. So remember, services provided by a way of sponsorship to any body corporate or partnership firm who is a service supplier, any person, if it is a body corporate, is a service supplier, same will come under what? Forward charge mechanism. Service supplier is any person other than a body corporate and who is a service recipient, any body corporate or partnership firm located in taxable territory, then only reverse charge mechanism will be applicable. If body corporate is providing services of sponsorship, recipient may be even body corporate or partnership firm located in taxable territory, same would be covered under forward charge mechanism. Okay. So remember, this is a very, very important amendment. This can be definitely asked in your examination. Then relating to entry 5AB, entry 5AB, that was renting of any commercial property. Basically renting of any commercial property. Now this renting is by an unregistered person. Commercial property is given on rent by an unregistered person and same is given to a registered person. Same is given to a registered person. In that particular circumstance, it is covered under reverse charge mechanism. It is covered under reverse charge mechanism. But in case, now what they have added is, if registered person is a composition supplier, if registered person is a composition supplier, RCM will not be applicable. First you have to find out whether they are liable to GST or not. In case they are liable to GST, it won't be covered under say reverse charge, would be covered under forward charge if an unregistered person's turnover exceeds the small threshold limits, exemption of 20 lakhs or 10 lakhs, case may be, service limit. So services by way of renting of any immovable property, services by way of renting of any immovable property other than residential dwelling, services by way of renting of any immovable property other than residential dwelling. Who is a service supplier? Any unregistered person. Who is a service supplier? Any unregistered person. And services is supplied to whom? Any registered person. Services supplied to whom? Any registered person other than person who has opted to pay tax under composition levy. Other than person who has opted to pay tax under say composition levy. In that particular circumstance, the registered person will be liable to pay tax under reverse charge. But in case of composition supplier, basically first to find out whether it's liable to tax or not, and in case it's liable, that will be covered under say forward charge. So basically when registered person is there, then it's a forward charge. It is reverse charge only when unregistered person provides the same to any registered person. Are you getting? So that was in relation to, RCM notation. RCM notation, which we have discussed. This we have already discussed in the last session also. Last session, if any metal scrap is supplied by any unregistered person, to any registered person, then same will also be covered under the ambit of, say, reverse charge mechanism. Okay. Next chapter is, exemptions from GST. Now, exemptions from GST, certain exemptions have been introduced. Basically, what one is section 11A that has been introduced by the Finance Number 2 Act 2024. That is regarding, power of the government not to recover GST, not levied or short levied as a result of general practice. So, if in the industry, amongst trade, a practice was that the goods or say services, they are not liable to tax. Goods or services, they are not liable to tax. But actually, the same were taxable. Or the practice was that they are liable to say 5% GST. But actually, 18% GST was to be levied. And it's a practice amongst the industry as a whole. And in case if the department recovers GST, it will be detrimental to the interest of the industry as a whole. Therefore, section 11A has been introduced, which states that government can exempt the, that part of the excess levy. In case it is nil rate, has been amongst industry practice and GST has been to be levied at rate of 18%, they can exempt at 18%. Okay, or if it is 5% and 18%, they can exempt the excess levy. Basic thing is this. That for that purpose, they have introduced section 11A, and similar provisions have been introduced in the IGST Act, that is also section 6A. So basically, what they say is power not to recover GST, not levied or short levied as a result of general practice. If the government is satisfied that, the practice was or is generally prevalent, regarding levy of central tax, including non-levy thereof, It is general practice, not what one person's practice, it's industry practice as a whole, regarding what? Levy including non-levy on any supply of goods or service or both, and such supplies were or are liable to central tax. In case where according to the Sept practice, central tax was not being levied, they were liable to say 18% GST when the central tax was levied at rate of nil rate, or say a higher amount of GST when it was leviable at 18% and it was levied at rate of 5%. So, at a higher amount of central tax than what was or is being levied in accordance with the Sept practice. Then the government may, on recommendation of council, by notification in the official gazette, direct that whole or part of central tax payable on such supplies, or as the case may be, central tax in excess of that payable on such supplies, but for the said practice, shall not be required to be paid in respect of the said supplies, on which the central tax was not or is not being levied, or was or is being short levied according to the said practice. So that is a fundamental, section 11A, which provides that government's power is there, that they can say exempt the recovery of the, GST in this particular case when this is general practice, not industry practice. So government may, on recommendation of council, by notification in official gazette, direct that whole of the central tax payable on such supplies, or as the case may be, central tax in excess of that payable on such supplies, but for the said practice, the same shall not be required to be paid in respect of supplies on which the central tax was not or is not being levied or is being, say, short levied in accordance with the said practice. Okay. So this is about what section 11 is there. Now certain amendments have been made in the entries also. Let us discuss the same. One is relating to, this was earlier amended. NCVET name has been changed, National Council of Vocational Education and Training. Affiliation services we have discussed last time. This was introduced last time. Basically, services of affiliation by central or state board of education or other, boards to the schools. If they give affiliations, okay, then to which school? To the school which has been established or owned by central government, state government, union territory, local authority, government or the government entity. Then exemption was there. So affiliation services exemption was provided earlier. Last time old age home provisions were asked in examination. Now one circular has been also issued in relation to this, charges which are charged up to rupees 2000, debit card, credit card, other charge card. So basically they have provided a circular in this regard that payment aggregators are there. They will also be entitled to get the benefit of the exemption here. So what they are saying is payment, this exemption was in relation to credit card, debit card, charge card or other payment card service. So basically whatever services are provided by acquiring bank, and acquiring bank has been defined to mean any banking company, financial institution including NBFC or say any other person who makes the payment to any person who accepts the card. So services by acquiring bank to any person, services by acquiring bank to any person in relation to settlement of an amount up to rupees 2000 in a single transaction transacted through credit card, debit card, charge card, other card service have been made exempt. Now they have given a circular that payment aggregators, they are coming under the ambit of other person, and in case if they are also providing this service, then in that particular circumstance the amount up to rupees 2000, that will be what service charges would be exempt. So payment aggregators are defined as entities. Payment aggregators, they are defined as entities who receive the payments from the customer, pool and transfer them onto the merchants within a specified time. Pool or transfer them to merchants within say specified time. On other hand, payment gateways are entities that provide technology infrastructure to route and facilitate processing of online payment transaction without any involvement of say funds. So they are providing, payment aggregators are different, payment gateways are different. Payment gateways, they are providing this facility, they are providing technology and they route and other facilitating processing of the online payments. So basically exemption has been provided to payment aggregators. Exemption under serial number 34 of the notifications available to RBI regulated payment aggregators. So they are payment aggregators will also be coming under the ambit of any other person in relation to settlement of an amount up to rupees 2000 in a single transaction transacted through credit card, debit card, charge card or other payment card service. As payment aggregators falls within the definition of acquiring bank. Payment aggregators fall within the definition of acquiring bank. It is also clarified that exemption is limited to the extent of payment settlement function only, which involves handling of money and does not involve payment gateway services. So payment gateway services will not be entitled for the benefit of exemption. Remember, payment aggregators are entitled for this exemption and not payment gateway. So this circular has been issued in this regard. Besides this, one more service has been introduced, that is insurance services. So basically, if any insurance services, they are provided by motor accident fund, motor vehicle accident fund, services of insurance provided by motor vehicle accident fund constituted under section 164B of the Motor Vehicle Act 1988 against contributions made by insurer out of premiums collected by third party insurance of motor vehicles is exempt. So services of the insurance provided by motor vehicle accident fund constituted under 164B of the Motor Vehicle Act 1988 against contributions made by insurer out of premium collected for third party insurance of motor vehicles, they are say exempt from tax. Then one service was related to this skill development services. As we have seen that under, if services are provided by National Skill Development Corporation, National Council for Vocational Education and Training, awarding bodies which are recognized by NCVET, assessment agencies which are recognized by basically NCVET, training bodies which are accredited with an awarding body, training bodies which is accredited with an awarding body recognized by NCVET. Similarly, if any training partners are there, which are developed by, which are approved by National Skill Development Corporation, training partners which are approved by National Skill Development Corporations, then the services provided by them in relation to National Development Program, Vocational Skill Development Course, National Skill Qualification Framework, basically those services will be what? Exempt from GST. So this was the exemptions. I think these are the amendments relating to the exemptions which we have discussed here. Okay. So exemption is a very, very important chapter from the examination point of view. So this is the amendments relating to exemption chapter. Now the next discussion, one is relating to the input service distributor. The definition now has been changed that if ISD can also say transfer the input tax credit in relation to the services which are taxable under say 9(3) or 9(4) or say 5(3) or 5(4). That is under reverse charge mechanism. Who is the input service distributor? Remember, who is the input service distributor? Basically, it's our office. And it is transferring the credit relating to the input services, common input services, which are availed by the various manufacturing units or various service providing units. That is the concept. That invoice is issued in their name, and then they will be transferring the credit on the say formula based, turnover based, that credit is transferred. So basically, they have given an amendment in the definition of the input service distributor. Earlier, they could not receive the invoices where RCM was applicable. Now they can receive the invoices even where RCM is say applicable. So basically what they say is, they are stating that input service distributor means an office of the supplier of goods or services or both, who receives, the tax invoices towards the receipt of input services, including invoices in respect of services liable to tax under 9(3) or 9(4) or under 5(3) or 5(4) of the IGST Act under RCM, that is under RCM. Okay, this is a repetition basically. For on behalf of what? Distinct persons, or on behalf of say distinct persons which are there having the same pen, for on behalf of them, and they are liable to distribute the credit. They are liable to distribute the credit in respect of the invoices in the manner provided in 20. So earlier this RCM invoices were not there, now they can also distribute a credit relating to the invoices where tax is to be paid under reverse charge mechanism. One is that. Then what is happening is relating to what one circular has been issued relating to the availability of the ITC. Now what is happening is, say one is the original equipment manufacturer, this is a motor vehicle manufacturer, and they are giving X works delivery. This is a dealer, and they will take, this dealer will take the delivery, and transportation may be arranged by the original equipment manufacturer for the dealer or by dealer itself. So the issue was whether they would be entitled to take the credit. Say if X works delivery has been given on say 25th of July, and then in transit it will be there. Subsequently it will receive the dealer's premises. So the department has clarified that as soon as this delivery is given, X works delivery is given, the dealer will be entitled to take the credit of the motor vehicle. But subsequently, say if any motor vehicles get damaged, etc., in transit, in that particular circumstance, or it is destroyed or lost, etc., then ITC is to be reversed. Or if that has been misused, that has not been reached to the premises and it has been diverted somewhere for personal consumption, etc., then also ITC will be required to be, say, reversed. Fundamentally, they have said that as soon as delivery is given, X works delivery is given or X factory delivery is given, the recipient will be entitled to avail the ITC. So this is an important circular which has been issued. ITC is available in respect of delivery, in respect of goods which have been delivered by supplier at his place of business under X works contract, subject to fulfillment of the other conditions of section 16. So it is in, say, in an automobile sector, the contract between the automobile dealers and the original equipment manufacturers is generally X works contract, and as per the terms of contract, the property in goods, that is vehicle, passes to the dealer at the factory gate of the original equipment manufacturer, where the goods are handed over to the transporter at the instance of dealer, and delivery of part of the OEM is complete at the factory gate, and delivery on part of the original equipment manufacturer is complete at what? The factory gate. The transportation may be arranged by the original equipment manufacturer on behalf of dealer, and where insurance is arranged, it may also be done on behalf of the dealer. So any claim in lost, if there, this delivery has already been given, it's the all risk and reward is now of the dealer. Therefore, if any claim is to be lodged for loss, the same is to be lodged by dealer. The dealer is also duly accounts for the invoice in the books of accounts on such delivery of vehicle at factory gate of the original equipment manufacturer. Dealer avails ITC on the date the vehicles are billed to him and handed over to the transporter by the original equipment manufacturer at his factory gate. Department was alleging that how you can take the credit at that particular point of time. They are saying that whenever you physically receive the vehicles at your premises, then only you will be entitled to take the credit. Now they have clarified that, it has been clarified that as per explanation to section 16 to be, the registered person, the dealer, can be considered to have received the goods at the time of such handling over of the goods by supplier to the transporter at his factory gate. So when the original equipment manufacturer, the original motor vehicle manufacturer hands over the motor vehicle at his factory gate, X works delivery is given, then the dealer, that is the registered person, that is dealer, will be entitled to take the ITC. The same principle is applicable in respect of supply of other goods, and also where the contract between supplier and recipient is X works contract, and as per the terms of the contract, the goods are to be delivered by the supplier to the recipient or to any other person, including transporter, on behalf of recipient at the supplier's place of business, and property in goods stands transferred to the recipient at the time of, say, handing over. Okay, so remember that. Now besides this, it has been further provided that if you will be entitled to avail the input tax credit, but in case if the goods have been diverted for non-business use at any stage subsequently, when you are receiving the goods at your premises, or say they have been, say, lost or stolen, destroyed, or they written off or disposed of by way of gift or samples, etc., registered person would be entitled to reverse the input, will not be entitled to take the ITC, or in case they have already taken it, they are required to reverse the same. So fundamentally they are saying that here in case of X works contract, ITC may be available to registered person on receipt of goods by the said registered person from supplier at his supplier's factory gate itself or premises, subject to fulfillment of the other conditions. So as soon as X works delivery is given, you will be entitled to avail the input tax credit. Then section 151 has been there, which has been provided that no refund shall be made of all the tax paid, or say ITC reversed, which would not have been paid or reversed had the provisions have not come into force at all material time because of retrospective availment of the input tax credit on account of restoration of registration, etc. That circular was there relating to ITC. Now one important case law which we have discussed earlier also, what the Supreme Court has treated, that in one plant and machinery and plant or machinery, there are two distinct terms. Under 17(5)(d), the term plant or machinery has been used. Credit won't be allowed. However, credit is allowed if they are supplied for construction of plant or machinery. Otherwise, if goods or services are used for construction of immovable property, okay, then in that particular circumstance, credit won't be admissible. How in case they are used for construction of plant or machinery, in that particular circumstance, ITC would be, say, admissible. So, under 17(5)(c), the term plant and machinery has been used. Under 17(5)(d), the term plant or machinery has been used, and they have defined the expression plant or machinery. Is not been defined. Plant and machinery has been defined. Plant or machinery has not been defined. Therefore, under 17(5)(d), we have to take the general meaning. This was a distinction which was made by the Supreme Court in Safari Retreats Private Limited case, and Apex Court observed that the explanation to section 17, which defines plant and machinery, seeks to define the expression under chapter 5 and chapter 6. In chapter 6, the expression plant and machinery appears at several places, but plant and machinery is found only in, say, plant or machinery is found only in 17(5)(d). And this implies that the legislature did not intend to give plant or machinery the same meaning as plant and machinery. Therefore, the court held that the expression plant and machinery and plant or machinery cannot be given the same meaning. Consequently, if construction is of plant and machinery as defined in the section 17(5) say, the benefit of ITC will accrue. Similarly, if construction is of plant or machinery, ITC will accrue. So they have given two different meanings to the same. However, this Supreme Court's judgment has been nullified by the Finance Act 2025, and they have made an amendment. This plant or machinery has been substituted with the expression plant and machinery from the very inception of the GST law. Basically here, if the construction of building was essentially for carrying out activity of supplying services such as renting or giving the same on lease or other transactions in respect of building or part thereof, which are covered under 17(2) or 17(5), clause 2 or clause 5 of schedule 2, then building could be treated as plant. In that case, building could be treated as plant. So then ITC would have been admissible. this case law has been now nullified, this by virtue of the amendment which has been made by the Finance Act. Then, as you are aware that section 74 provisions relating to tax demand, 73 and 74 provisions are relating to tax demand. They are applicable up to FY 23-24, and then subsequently 74A provisions have come into force with effect from financial year 24-25. Basically here now tax demands are governed by 74A. Therefore, you won't be entitled to take credit of any tax paid in pursuance of in accordance with the provisions of section 74 in respect of period from financial year up to financial year 23-24. So this was a amendment made by the Finance Act. ITC won't be admissible of tax which has been paid under section 74 because it's on account of fraud, willful misstatement, or say suppression of facts. One is relating to the ISD, input service distributor, as we already discussed, means the office of the supplier of goods or service or both, which receives invoices towards input services, including invoices in respect of services liable to be taxed under 9394. This is there under reverse charge, or under 5354, or say under 5354 on behalf of distinct person, and they are liable to distribute the ITC in respect of such invoices in the manner provided in section 20. Okay. Now here what they have stated here is this for the purpose of distribution of such credit, basically following conditions are required. Here such person shall be required to be registered as ISD. They will be required to register as ISD, and they shall distribute the credit in respect of tax invoices towards receipt of input services, including invoices in respect of services liable to be taxed under reverse charge mechanism under 93 or 94 or 53 or 54 of the IG state. Such person shall be required to be registered as ISD under section 24 this 8 compulsory registration, and shall distribute the ITC in respect of tax invoices towards receipt of the input services, including what? Now it has been added, including what? Invoices in respect of services liable to be taxed under 93 or 94. So under RCM also, if they are receiving the invoices, though their distinct person must have paid tax, they will be eligible to distribute that ITC also, 9394 or 5354. Okay, reverse charge mechanism. Basically, ISD is our office. Say, are you understanding? This is our office. We are having various manufacturing units or service providing units, and input services are availed by them. And the service supplier bills the same to whom? The ISD. So ISD has got itself registered. Say bill is of 2 crore rupees and GST paid is say 18% means 36 lakh rupees. In that particular circumstance, this credit of 36 lakhs will be distributed to our same, our manufacturing units having under common PAN. Under common PAN, that credit is distributed. How will be distributed? As per the rules, it will be distributed. Basically, the input service distributor shall distribute the credit of central tax or integrated tax charge on the invoices received by him, including credit of central tax or integrated tax in respect of services subject to levy of tax under 53 or 54 or 93 or 94. That is under RCM. This is the amendment. Paid by distinct person, registered in same state as of the ISD. So in case if the ISD is registered in say UP, this distinct person is registered in UP. He has paid tax under 93 and 94. He has paid tax under 93 and 94 under RCM. Then ISD can distribute that credit. Okay. So ISD shall distribute the credit of the central tax or integrated tax charged on invoices received by him, including the credit of central tax, integrated tax in respect of services, subject to levy of tax under 9.3 or 9.4 or 5.3 or 5.4, paid by distinct person registered in the same state as that was ISD, in such manner and within such time and subject to such restrictions as may be prescribed. The central tax shall be distributed as central tax or integrated tax, and integrated tax shall be distributed as integrated tax or central tax by way of issue of documents containing the amount of ITC in such manner as may be prescribed. Now, basically, what is the procedure for distribution of the ITC? So here basically an ISD shall distribute the ITC in the manner and subject to the following conditions. Now remember, ITC available for distribution in month of July will be distributed in the same month. First is in the same month. If it is available for distribution in the month of July, it will be distributed in July itself. ITC available for distribution in the month shall be distributed in the same month, and details thereof shall be furnished in form GSTR 6. The amount of credit, whatever you are distributing, cannot exceed the amount which is attributable, which is basically available for distribution. So amount of credit distributed shall not exceed the amount of credit available for distribution. Shall not exceed the amount of credit available for distribution. Then the credit of tax paid on input services attributable to recipient of credit shall be distributed to that recipient. If we are having R1, R2, R3, R4 recipient, input service X is used by R1 only, then it will be distributed to R1. Input service Y is used by R1 and R2, then it will be distributed on the basis of turnover of whatever turnover was there in the preceding financial year, preceding quarter, R1, R2. Input service, say Z, was availed by R1, R2, R3, R4. Then it will be distributed to all the 4 units. So the ITC is required to be distributed to one of the recipient R1, whether registered or not, amongst the total of all the recipients to whom ITC is attributable, including recipients who are engaged in making exempt supplies, even though that credit will be distributed or otherwise not registered for any reason, shall be what? C1 amount. Say if the turnover of R1 is say 25 lakh rupees, total turnover of all the say 4 units is 1 crore 25 lakh rupees, and the common credit which is used by that particular unit is say 180 is the total common on the input services. So this way distribution will be made on the basis of the turnover. Then relevant period, if the turnover details are available for all the units in the preceding financial year, that will be taken. In case if the same are not available, then in that particular circumstance. In case if the same are not available, then the last quarter for which details of turnover of all the recipients are available previous to the month in which the credit is say distributed. Recipient of credit means these are the recipients who are having same PAN as of the ISD. Then ineligible and eligible credit will be say separately distributed. ITC of IGST. Now remember, IGST credit, same which we have discussed earlier, will be distributed as IGST. CGST, SGST within same state as CGST, SGST. CGST, SGST in different state will be distributed as IGST. ISD is in Delhi. This is CGST, SGST credit. The same is to be distributed in recipient in Rajasthan. It will be distributed as IGST because they will be able to utilize the credit, only IGST credit can be utilized. They cannot utilize CGST and SGST credit of Delhi there. So here ITC of IGST is to be distributed IGST. ITC of CGST, SGST and UTGST shall be distributed CGST, SGST, UTGST respectively if recipient is in same state. ITC of CGST, SGST and UTGST distributed as IGST if recipient is in different state. ISD will issue ISD invoice. credit note to be issued on reduction of credit, additional ITC to be distributed in the above manner. Okay. Now distribution of credit to distinct person. For distribution of credit in respect of input services attributable to one or more distinct persons subject to levy of tax under 9394. 9394. Registered person having same PAN and state code as of ISD may issue invoice, or as the case may be, credit or debit note as per provisions of 54(1)(a) to transfer the credit of common input services to ISD, and such credit shall be distributed by ISD in the same manner. So 93 and 94 tax first of all will be paid by whom? First of all, it will be paid by the recipient of that particular service, and then in that case they will raise an invoice in favor of ISD in the same state. Then ISD will distribute the common services. So this is all about the distribution aspects. So that was amendment relating to the input service distributor. Now the next chapter is registration, and let us see what the amendments are there in respect of this chapter. First is relating to about procedure for registration. So here basically biometric Aadhaar based registration, biometric based Aadhaar registration, authentication, the same has been made mandatory for all the states. So basically earlier it was a pilot project, now it has been made mandatory in respect of the state where the application for registration is made. It has been further provided that every application where Aadhaar authentication is obtained shall be followed by taking a photograph of the applicant in case the applicant is an individual, and other than an individual of the notified persons, okay, along with the verification of the original copy of documents which have been uploaded on the portal along with the GST REG 01. So there will be notified centers we have to go, and they have to go there, complete the formalities. The applicant will be deemed to application will be complete only when there is a successful verification of all the documents. Okay, this amendment has been made. Then relating to about the revocation of cancellation, or say restoration of registration. Restoration of registration, the provisions were there relating to restoration of registration under section 30. So now basically we have to make an application for revocation of cancellation of registration, or we have to make an application for restoration of registration within the time and subject to such conditions and restrictions as may be prescribed, as we have seen. Then that is within a period of 90 days, which can be extended to a further period of say 180 days from the date of service of order of cancellation of say registration. Now it has further been provided that such revocation of cancellation of registration, such revocation of cancellation of registration, such revocation of cancellation of registration shall be subject to such conditions and restrictions as may be prescribed. Such revocation of cancellation or registration shall be subject to such conditions and restrictions as may be prescribed. So this amendment has been made by Finance Number 2 Act 2024 with effect from 1st of November 24. So that was about the registration. Amendment relating to registration. Okay. Next is relating to the chapter tax invoice, credit notes and debit notes. Next is relating to chapter tax invoice, credit notes and debit notes. Basically, what is the time limit of issuance of invoice? Now here, if a reverse charge mechanism is applicable, as you are aware, recipient is required to issue tax invoice. Recipient is required to issue tax invoice. In case if an unregistered person, supplies services to whom? To registered person. This is notified under say section 9.3 or section 9.4, the registered person is required to issue tax invoice. Now the time limit for issuance of the tax invoice would be what? Within 30 days. Within 30 days from the date of receipt of the said supply of services or goods, basically which are chargeable to tax under reverse charge basis. So fundamentally this is basically dealing with the reverse charge mechanism supplies. So supplies which are received by a registered person from unregistered person, supplies which are received by a registered person from unregistered person, in that particular circumstance, here the tax invoice is to be issued, within a period of 30 days, from the date of receipt of said supply of goods or services, or both as the case may be. Okay, that has been provided here. Relating to what about the issuance of the invoices, here if it is B2B supplies, or in case if it is supplies which are provided by or through an ECO, or in case of an online information database access retrieval services is supplying services to unregistered person, that is B2C supplies, OIDR services have been supplied to an unregistered person, then irrespective of the value of such supply, tax invoice issued by a registered person, they shall contain the name of the state of the recipient. Name of the state of the recipient would be mandatory, name of the state of recipient, and the same shall be deemed to be what? Address on record of the recipient. A circular has also been issued in this regard. Basically, it is dealing with what? If there is a supply of, say, online money gaming, or say, if any taxable services is supplied or by or through an ECO, even if the same has been supplied through digital or say electronic platform, or if it is a OIDR services, the same has been supplied to a recipient who is, say, unregistered, irrespective of the value of supply, a tax invoice issued by a registered person shall contain the name of the state of the recipient, and same shall be deemed to be address on record of the recipient. So fundamentally here, name of state of recipient is to be recorded, the same is to be recorded when tax invoice is issued to, say, unregistered recipient, and basically here when the name of the state is recorded, that will be deemed to be what? The address on record of the recipient, and will be they will be able to now determine to which state the revenue will be there. So this circular has also been issued in this regard. Okay, a circular has also been issued in this regard. And basically the place of supply is, in that case, will be the location of the recipient, and that location of the recipient is the name of the state which has been recorded as provided in this particular rule. So we have to rule 46 along with the place of supply helps in determining the state revenue. So this is to be kept in mind. Now, as already discussed, in basically for invoice requirement in case of reverse charge supplies. So a registered person who is liable to pay tax under 9.3 or 9.4, registered person who is liable to pay tax under 9.3 or 9.4 shall issue within the period as may prescribed. Now what the period has been prescribed here? Within 30 days. Within 30 days of receipt of supply. An invoice, they have to issue a tax invoice in respect of goods or services of both received by him from the supplier who is not registered, from unregistered supplier. So they have to issue a tax invoice within a period of 30 days from the date of the receipt of the goods or services or both. And supplier who is not registered, unregistered supplier, we are saying they are supplying to registered person, chargeability to tax under reverse charge mechanism. So basically supplier who is not registered shall include the supplier who is registered solely for the purpose of deduction of tax at source. So in case if a person, government has been registered only for the purpose of tax deduction at source, they will also be coming under the ambit of supplier, say, who is not registered. Time limit, we have already discussed about the issuance of the invoices in respect of services. So this was in relation to tax invoice chapter, where discussion has been there. Tax invoice chapter. This amendment was there in relation to tax invoice chapter. Next chapter is accounts, records and e-way bill. And here basically an amendment has been made. One is the consequential amendments that wherever 73 and 74 is there, along with that they have also mentioned 74A, because now 74A will be the governing section relating to tax demands. Okay. So in e-way bill, in e-way bill they have made an amendment that in case now an unregistered person can also opt to generate e-way bill. So for that there will be an enrollment of unregistered person. For that there will be enrollment of unregistered person to generate e-way bill. So basically an unregistered person required to generate a e-way bill in form GST e-way bill 01, or an unregistered person opting to generate e-way bill in form GST e-way bill 01 on common portal, he shall submit the details electronically on the common portal. In form GST ENR 03, either directly or through facilitation center notified by the commissioner, and then these details will be validated, and then he will be given a unique enrollment number, and subsequently he will be able to generate an e-way bill. So unregistered person may also opt now to generate an e-way bill. So for that purpose he will first have to enroll, and then unique enrollment number will be provided, and then that he will be able to generate an e-way bill in this regard. In payment of tax chapter, consequential amendments have been there relating to what? That wherever the section 73 and 74 were there, which are relating to issuance of show cause notice for tax demands, section 74A have also been mentioned. Section 74A has also been mentioned. Then relating to e-commerce transactions under GST, under 9.5 we already discussed that the restaurant services, they are covered here. 9.5 we have discussed about the same. Beside this, specified premises amendment we already discussed. Then we are having, a circular was issued relating to what? Basically, that in case the e-commerce operator, say e-commerce operator is required to pay GST under section 9.5, is regarded as supplier of those services. So they have issued a clarification in this regard. Section 95 tax. Section 95 tax is to be paid through e-cash ledger only. E-cash ledger only. Remember this. Section 95 tax is paid through e-cash ledger only. But in case, say if services are provided and they are supplying their own services also as well as 95 services also, they will be entitled to take the ITC. They will be entitled to take input tax credit of the input and input services which are basically used for supplying these 95 services. But we will not be able to utilize because 95 tax is to be paid in cash. But this ITC can be used for payment of GST on other supplies. Payment of GST on other services. In case they are also providing other services, they are providing through their own platform also, then in that particular circumstance, they can be able to utilize the same. They will be able to utilize the same. That circular is given by us in our main book. So let me show you that, because here we are just discussing the amendments which are applicable in say our compiler portion. This is our comprehensive book where we have what was I was telling. This circular has been added here. Whether ECO is required to pay tax. Whether ECO is required to pay tax under 95 of the CGST Act is liable to reverse proportionate input tax rate on input and input services to the extent of the supplies made under 95. So basically it is clarified that ECO who is liable to pay tax under 95 of the CGST Act in respect of specified services is not required to reverse the ITC on his input and input services proportionately under 17.1 and 17.2 of the CGST Act to the extent of the supplies made under 95. So basically they are not required to reverse. They will be entitled to avail the ITC. What important aspect is that 95 tax is to be paid through electronic cash ledger. It is further clarified that ECO will be required to pay full tax liability on account of supplies under 95 of the CGST Act only through electronic cash ledger. Only through electronic cash ledger. The credit availed by him, he will be required to pay tax under 95 through e-cash ledger only. The credit availed by him in relation to input and input services which are used to facilitate such supplies, they cannot be used to discharge 95 liability, but they can be utilized to discharge tax liability in respect of supply of services on his own account. So they can use the credit, but for supply of services on their own account, but not on account of 95. 95 is to be paid through e-cash ledger only. This is an important one. Remember, they can ask you that this is 95 service, their liability, that is to be paid in cash. Then these are the input and input services which have been used for providing 95 services. Basically, they will be entitled to avail the ITC, but they can be utilized only for payment of tax, okay, on their own account. That is about our circular which I was telling. That is in relation to ECO, amendments in relation to ECO. Remember that. Then our next chapter is relating to returns. Not very much only, about TDS. Returns in relation to TDS. They have made certain provisions that, TDS returns in GSTR 7, the same is to be furnished in form GSTR 7 is to be furnished by 10th of the next month. Beside this, nil return is also required to be furnished. TDS returns, that amendment is there. That is basically this amendment has been made. That is what? the registered person shall furnish GSTR 7 return electronically on the common portal on or before 10th of the month. Tax deductors, they are required to furnish the return on or before 10th of the month succeeding the calendar month in which the tax has been, say, deducted at source. Now, there the registered person shall furnish the return. Registered person shall furnish the return for every calendar month. For every calendar month, whether or not any deductions have been made during the said month. Okay. So, this amendment is there relating to the same. Even nil return is required to be furnished. That means what? Even nil return is required to be furnished. Then, relating to imports and exports, important thing is what? Under section 54, we were, getting the refund of the taxes. We were getting what? The refund of the taxes. Refund of the taxes. Basically, refund of the taxes, which has been on paid IGST, which has been paid on the goods which have been exported on payment of IGST, or we can also take, the refund of the unutilized ITC. Now, section 54 has been amended to provide that one thing is they specifically now mentioned that earlier it was under 54 itself 3 that refund will not be eligible if the goods are exported out of India are subjected to export duty. Now, they have mentioned it in 54:15 basically that that has been omitted from the general clause, and now it has been separately, subsection has been inserted which provide that no refund of unutilized ITC. It is on account of zero rated supply only. No refund of unutilized ITC on account of zero rated supply of goods. On account of zero rated supply of goods, or integrated tax paid on account of zero rated supply of goods, or integrated tax paid on account of, say, ITC or integrated tax paid on account of zero rated supply of goods shall be allowed. Okay, where zero rated supply of goods are subject to, say, export duty. So, where zero rated supplies are what? Subject to export duty, refund shall not be, say, admissible. Are you getting? So, this has been amendment. Now, besides this, amendment has been made in, zero rated supply section 16 also. What they are stating now is, here basically the government may by notification specify the persons, class of persons who may make zero rated supply on payment of integrated tax. Now, they are notifying the persons who are making supply on payment of integrated tax and claim the tax so paid. Claim the tax so paid in accordance with the provisions of section 54 of the CGST Act or the rules made thereunder. Claim the tax so paid in accordance with what? Provisions of section 54 of the CGST Act and rules made thereunder. Or it may be, say, class of goods or services or both. They may specify what? Class of goods or services or both on zero rated supply of which supplier may pay integrated tax. Supplier may pay, that is person and class of goods and services, where supplier may pay integrated tax and claim the refund of the tax so paid in accordance with the provisions of section 54 of the CGST Act. So, that amendment has been there. Besides this, section 16(5) has been providing that the refund of unutilized ITC, on account of zero rated supply of goods or integrated tax paid on account of zero rated supply of goods shall be allowed. Basically, refund shall not be allowed where such zero rated supply of goods subject to export duty. Same as of 54, 16(5) also provides for the same, that no refund of ITC on account of zero rated supply of goods or of integrated tax paid on account of zero rated supply of goods shall be allowed where the zero rated supply of goods is subject to, say, export duty. Goods which we are exporting are subject to export duty, then refund won't be allowed. Okay. This blue amendments are applicable for the students writing their exam in May 26. So this was about the import-export chapter. Next chapter is assessment and audit. So basically only consequential amendments have been made in these sections, that wherever the section 73 and 74 has been worded, section 74A has also been introduced. In all these sections, wherever 73 and 74 was there, 74A has also been introduced. So that is not much a major amendment in assessment and audit. Now, relating to demands and recovery. Remember, demands and recovery, this chapter has been substantially amended. Demands and recovery. So, section 73 and section 74, this was dealing with normal period of limitation for issuance of show cause notice. And this was dealing with extended period of limitation for issuance of show cause notice. In case of, say, fraud, willful misstatement, and suppression of facts, and here this was dealing with the normal provisions. So basically now they have amended this particular section 73 and 74 won't be applicable for issuance of any show cause notice, basically raising tax demands from financial year 24-25 onwards. That is up to 23-24. Up to 23-24, 73 and 74 will be applicable. From 24-25 onwards, if the show cause notice required to be issued, then in that particular circumstance, provisions of section 74A will be applicable. Basically, section 73 is dealing with determination of tax pertaining to period up to financial year 23-24 not paid or short paid, or NFC refunded, or ITC wrongly availed or utilized for any reason other than fraud or say willful misstatement or suppression of facts. So basically here 73 and 74, they won't be applicable for raising the tax demands for financial year 24-25 onwards. Okay, and for 24-25 onwards, a new section 74A has been introduced, and basically it is covering for both non-fraud and fraud tax demands. So section 74A will be discussing. Section 74A is determination of tax not paid or short paid, or NFC refunded, or ITC wrongly availed or utilized for any reason, whether normal or whether fraud, etc. For both, one single section has been framed. So basically that is what pertaining to financial year 24-25 onwards. So the provisions of this section shall be applicable for determination of tax pertaining to financial year 24-25 onwards. Pertaining to financial year 24-25 onwards. And here section 74A provide that where it appears to the proper officer the tax has not been paid or the tax has been short paid, or the ITC has been say wrongly availed or utilized, or tax has been say NFC refunded, then he shall serve a show cause notice on the person for any reason, whether it's fraud or non-fraud. He shall serve a show cause notice on the person requiring to show cause why he should not pay the amount specified in the notice along with interest and along with penalty leviable under the Act. However, show cause notice will not be issued if tax amount is less than rupees 1000. It was there also. Earlier also, it is here also. Now, what is the time limit for issuance of show cause notice? Time limit in both the cases now is 42 months. 42 months from the due date of furnishing, the annual return of the financial year to which tax demand pertains. Now say if it is financial year 24-25, if it is financial year 24-25, the due date of furnishing for the return, annual return is say 31st of December 25. The due date is 31st of December 25. Then they are saying 42 months from the said. 4 years expires on 31st of December 29. That is 48 months expires here. Then 6 months prior to that will be 42 months. So it will be 30th of June 2029. It is 30th of June 2029 up to which you will expect a show cause notice. So remember, it is 42 months from the due date of furnishing of the annual return relating to the financial year to which the tax demand pertains, or date of the erroneous refund as the case may be. Then if for subsequent period, we already seen, fundamentals have changed now. For subsequent period also we seen that if the grounds relied in the notice earlier are same for subsequent period also, that is the allegement remains same, then allegations remain same. In that particular circumstance, instead of serving a separate show cause notice for subsequent year, they will give a statement, and that statement itself will be deemed to be what? A show cause notice. The service of statement for tax demands for subsequent period, if grounds relied upon are same, okay, as of the SCM, then, and this service will be deemed to be what? Service of the show cause notice. Relating to penalty provisions, for non-fraud cases, it is the 10% of tax due. It is 10% of tax due, or rupees 10,000, whichever is higher. And in respect of fraud cases, it will be penalty equivalent to 100% of the tax. 100% of the tax. So basically, for non-fraud cases, penalty shall be what? 10% of tax due from such person, 10% of tax due from such person, or 10,000, which I will say higher. And for fraud cases, penalty shall be what? 100% of tax due from such person. Penalty shall be what? It would be 100% of the tax due from such person. Okay, this is a penalty provision. Now, the proper officer shall, after considering the representation, if any, made by the person, they will adjudicate the case. Okay, they will determine the amount of tax, interest and penalty due from such person, and they will pass an order accordingly, Now, what is the adjudication time limit? Basically, the adjudication time limit will be what? 12 months from the date of issuance of show cause notice. The proper officer shall issue adjudication order. The proper officer shall issue adjudication order within 12 months from the date of issuance of notice. Within 12 months from the date of issuance of notice. Now, maximum extension in adjudication period. Maximum extension in adjudication period is 6 months by the commissioner or an officer authorized by the commissioner, not below the rank of JC. Now what they are saying is, in case prior to issuance of SCN, you can make voluntary payment. Then in this case, when it's a case of non-fraud case, no penalty. They issued a SCN. And within 60 days, you pay tax and interest. Then no penalty. And proceedings basically gets concluded. Proceedings gets concluded. But say if they adjudicate, then no further remedies there. Your penalty will be how much? In non-fraud, it is 10% of the tax, or rupees 10,000, which is say higher. But in case of fraud, etc., even if you are making voluntary payment, prior to SCN, it is 15% of tax. Then SCN they gave, within 60 days you pay the amount of tax, interest and penalty. It will be 25% of tax. Then you wait for the adjudication. You do not pay at the time of SCN. You wait for the adjudication, and within 60 days of the same, if you pay, it becomes 50%. It becomes 50%. And after 60 days, it will become say 100% of the tax. So this is the provisions, this is the changes which have been made. Time limit has been enhanced from 30 to 60 days now. So payment of tax and interest in non-fraud cases and conclusion of the proceedings, that I have already told you, that a person chargeable with tax other than by reason of fraud or say willful misstatement or suppression of facts to evade tax, he may, before service of SCN, before service of notice, pay the amount of tax along with interest on the basis of his own ascertainment or ascertained by the proper officer, and inform the proper officer in writing of such payment, and the proper officer on receipt of such information shall not serve any notice on the statement, and no penalty shall be payable. So before SCN you pay the amount of tax and interest, no SCN. Proceedings are not started because you have voluntarily paid the same. Otherwise, if they give you a SCN, then you pay the tax along with interest within 60 days of the issuance of SCN, and on doing so, no penalty shall be payable, and all proceedings in the respect of said notice shall be deemed to be concluded. Besides this, payment and conclusion of proceedings in say fraud cases. So the person chargeable with tax, where tax has not been say, where tax has not been say paid, tax has not been paid, or the same has been say short paid, or the same has been erroneously refunded, or where ITC has been say wrongly availed or utilized by reasons of fraud or say willful misstatement or say suppression of facts to evade tax. Then there is the option of what? Voluntary payment of tax. So here, before service of notice, pay the amount of tax along with interest and penalty. Penalty here will be 15% of tax, as I already told you, in case of fraud, and inform the proper officer of payment in writing, who shall not serve you any notice in respect of the tax so paid or any penalty payable under the provisions of the Act or the rules made thereunder. One is that voluntary payment before the issuance of SCN. Second is, if they have issued the SCN, then you can make a mind that within a period of 60 days of SCN, you pay the entire amount of tax, interest and penalty. But penalty will be how much? 25% of the tax. So pay the said tax along with interest and penalty equivalent to 25% of such tax within 60 days of issue of notice. And in doing so, all proceedings in respect of the said notice shall be deemed to be concluded. And third one is what? Bolo no. We make a reply, we wait for adjudication. Still, if you have an opportunity here. Let the adjudication order is given to you. And then within 60 days of the communication of the adjudication order, you pay the tax, you pay the interest and penalty. And penalty in such case would be what? 50% of the tax. Pay the tax along with interest and penalty equivalent to 50% of such tax within 60 days of communication of the order, and on doing so, the proceedings in respect of the said notice shall be deemed to be concluded. Otherwise, penalty would be 100% of the tax. Then, where the proper officer is of the opinion that amount voluntarily paid falls short of the amount actually payable, he shall proceed to issue the notice in respect of such amount which falls short of the amount actually payable. Then penalty payable if self-assessed tax is not paid within 30 days. This was provided earlier also. In case of if your self-assessed tax is still outstanding for a period of 30 days, then there will be no relief. Penalty would be payable. Now we are saying all the proceedings stands concluded if you pay all the tax, interest, penalty, etc. But that proceedings does not include criminal proceedings. Prosecution proceedings that can be continued. All proceedings in respect of the said notice shall basically not include proceedings under 132. Imprisonment provisions are there. And if if company is there, company main accused is company and directors have been co-accused. So if the conclusion of proceedings is there against the main accused, then deemed conclusion of proceedings against the co-notices. Suppression basically shall mean what? Non-declaration of facts or information which a taxable person is required to declare in the return, statement, report or any other document furnished under the Act or the rules made thereunder, or failure to furnish any information on being asked for in writing by the proper officer. Now basically what happens is they are issuing a show cause notice. Now in case they have issued a show cause notice alleging charges of fraud, but charges of fraud have not been established. In fraud, penalty was 100%. So in that particular circumstance, when charges of fraud is not established, then penalty will be reduced to 10% of the tax. Normal penalty is how much? 10% of tax. So penalty payable as per non-fraud cases, if charges of fraud etc. are not established, penalty equivalent to 10% of tax due from such person, or rupees 10,000, which is say higher, is payable. Then if under 74A, what is the timeline for adjudication? It is 12 months and its extension is there for further period of 6 months. In case if they do not give the adjudication order within the timeline specified, then there will be deemed conclusion of the adjudication proceedings. There will be deemed conclusion of the adjudication proceedings. So this was a very, very important amendment relating to what section 74A that can be definitely asked in the examination relating to demands. Now under 122 1B, basically there earlier it was the e-commerce operator was liable for penalty, but now which e-commerce operator is liable? Who is required to collect tax at source and he allows supply of goods or services or both from an unregistered person, okay, and conditions by unregistered person has not been complied with, or in case we may allow an interstate supply of goods or services or both for a person who is not liable to make interstate supply, or in case he fails to furnishes correct details in form GSTR 8 of any outward supply of goods effected through it by a person who has been exempted from obtaining registration. So exempt unregistered persons can also make supplies, and they have to comply with the conditions, and in case they have not complied with the conditions and they have made the supplies through ECO, then ECO is liable to a penalty. Or if they make an interstate supply, they are not allowed to do so, or composition supplier makes an interstate supply not allowed to do so, then ECO is liable to penalty of 10,000 rupees or amount of tax, amount equivalent to the amount of tax involved, had such supply been made by a registered person other than a person paying tax under composition scheme, which I say higher. So just this consequential amendment is there in this particular chapter. Now relating to appeals and revision. One is, the timeline for filing appeal to GST 80 by the department was 6 months. That is, the commissioner will review the same and ask a lower authority to go and file an appeal against the appellate authority's order within a period of 6 months. Okay. Then condonation of delays for a further period of, say, 3 months. Besides this, remember, there is a change in pre-deposit amount. Pre-deposit limit before the first appellate authority, may be Commissioner Appeals, or JC Appeals, it will be 100% of the tax which has been admitted, interest which has been admitted, penalty which has been admitted earlier also, on 10 or plus 10% of the disputed tax. 10% of disputed tax, no interest, no penalty. It is tax only, subject to maximum of rupees 40 crores. Earlier it was 50 crores, now it is 40 crores. It is 20%, 20 crores for CGST and 20 crores SGST. So remember, pre-deposit limit has been now reduced. Pre-deposit limit will be 20 crore CGST, 20 crore SGST. Okay, pre-deposit. If disputed tax is, say, 220 crores CGST and 220 crores SGST, we want to go and file an appeal now. Earlier it was 25. Now it will be 20 crores is the maximum. 10% of 20 to 20, it is 222. So it will be 20 crores CGST and 20 crores SGST, or if it is IGST, it is 40 crores IGST. So it is 10% of the disputed tax. Now when you go and file an appeal to the GST 80, the earlier further amount of 20% of disputed tax was to be deposited as pre-deposit along with the admitted tax, interest and penalty. Additional 20% was there. Now this 20% has been reduced to what? 10%. One amendment is there. 20% is reduced to 10%. Beside this, it was 50 crores CGST, 50 crores SGST. Total it was 100 crores. Now it has been reduced to 20 crores. $20 crores CGST and 20 crores SGST. It's 40 crores. So here if you are filing an appeal to the appellate authority or if you are filing an appeal to the Goods and Services Tax Appellate Tribunal, the pre-deposit penalty, pre-deposit amount will now remain same. Okay. So this is the amendment which we have discussed relating to appeals. Amendment part we are discussing now. Besides this, earlier we have seen that Competition Commission of India was dealing with the anti-profiteering cases, where profiteering has been involved. Who was investigating? Competition Commission of India was the investigating authority there. That is, profiteering cases was investigated by them. Now, instead of Competition Commission of India, it will be a special bench of Goods and Services Tax Appellate Tribunal. So, what cases the special bench of Goods and Services Tax Appellate Tribunal will hear? That is appeals against the orders of the appellate authority or revisional authority, where one of the issue is place of supply, or for conducting an examination or adjudicating the cases referred under 171(2), that is profiteering cases, if so notified under the Sept section. So now here this profiteering sunset clause has been provided. No application will be filed on or after 1st of April 25, that we already discussed. Beside this, who will look after those cases which have already been filed? This will be the special bench of the Goods and Services Tax, or principal bench of the Goods and Services Tax Appellate Tribunal. It will be the principal bench where the president of the tribunal sits. So place of supply is one of the issue in dispute. Principal bench will dispose of that case. Further matters referred under 172(1)(2), that will also be adjudicated by the principal bench. So this amendment is there. Remember the same. Then tribunal will come into existence, as you are aware that you have to file an appeal within a period of, say, 3 months from the communication of the order, that is the adjudication order or say revisional order. But tribunal has not been in existence, so whenever it will come into existence, from that 3 months period or 3 months from the adjudication order, whichever period expires later, appeal is to be filed. This is a consequential amendment when the GST 80 will come into existence. Okay. Pre-deposit we have already discussed. Then earlier, when department used to file an appeal, there was no power to condone the delay. The time limit was 6 months. Now this delay can be condoned for a further period of, say, 3 months. So this was about the appeals and revision chapter which we have discussed. So we are in the last stages now, relating to appeals and revision. We already made a discussion. Now relating to the miscellaneous provisions. In miscellaneous provisions chapter, only anti-profiteering issues are to be dealt with. So basically now this we have already discussed, that the central government has notified 1st of April 25 as the date from which the anti-profiteering authority shall not accept any request for examination as to whether the input tax rate availed by a registered person or reduction in the tax rate has actually resulted in commensurate reduction in the price of the goods or services or both supplied by the registered person. So that is relating to this, And this is sunset clause has been provided from 1/4/25. Applications will not be entertained. And one amendment we already discussed. It is the appellate tribunal will deal with the cases relating to the anti-profiteering. Okay. So this was all about what the amendments which we have discussed relating to goods and services tax. In customs only, a small amendment has been made, and we'll discuss the same. In customs, now this amendment has been made. In customs, import of goods at concessional rate of duty for specified end use. As you are aware, these rules have been framed. So if I want to import any goods at a concessional rate of duty, say the custom duty is say 20%, and an exemption notification has been issued that the goods will be exempt in excess of say nil. That means duty is nil. Or if goods may be exempt in excess of say 5%, that means duty is 5%. But you are required to follow exemption notification. Condition is there that you are required to follow these rules, that is customs import of goods at concessional rate of duty rules. It has been given in the exemption notification, then these rules are basically applicable to avail the benefit of the exemption notification. Now here, earlier what was happening was that the intimation was to be given. If you want to get the benefit of the notification, you have to execute a bond and you are required to submit a monthly return. Now what they have made an amendment is, they have made an amendment that the return will be furnished not monthly, but now the return will be furnished quarterly. Return will be furnished quarterly. This is a major amendment which has been made. Instead of furnishing the monthly return, it is to be furnished quarterly by 10th of the month following the quarter. By 10th of the month following the quarter, the return is to be furnished quarterly. Besides this, in case we send the goods to job worker, then the maximum period of duration earlier was 6 months. This duration has been increased from 6 months to 1 year. This duration has been increased from 6 months to 1 year. Similarly, for re-export of goods, the time limit was 6 months. Now it has been enhanced to say 1 year. Re-export of goods, that same has been enhanced to 1 year. So instead of monthly return, quarterly return is to be submitted, and information is to be given on quarterly basis by 10th of the month following the said quarter. Okay, and timeline for job work as well as for re-export etc. the same has been say increased. Besides that, definition of quarter has been also provided. What quarter means? Basically it is April, May, June. That is 3 calendar months: April, May, June. Then July, August, September, October, November, December, and January, February, March. So this is that amendment. And one amendment is there in foreign trade policy. Let me discuss that also. That is about the foreign trade policy. We will be discussing that. What amendment has been made in foreign trade policy is that in case if they make any changes in the foreign trade policy, they will consult with the stakeholders. That is consultation with the stakeholders. That is central government in course of formulation of foreign trade policy, as and when it deems reasonable to do so, may seek views, suggestions, comments or feedback from the relevant stakeholders, including importers, exporters, industry experts, with regard to formulation, incorporation of specific provisions or amendments in FTP, and to that extent possible, 30 days time may be provided to such relevant stakeholders for submission of their views, suggestions, comments or feedback. However, the central government has reserved the right to suo motu formulate, amend or incorporate any specific provisions in FTP without seeking what? The views, suggestions, comments or feedback of the stakeholders. Basically, it is not necessary that they are bound by these suggestions. These are only suggestions, and government may not, take these suggestions in implementing the foreign trade policy. So after receiving the views, suggestions, comments or feedback, if such views, suggestions, comments or feedback are not incorporated in FTP, central government may provide the relevant stakeholders reasons for not considering their views, suggestions, comments or feedback while formulating or amending or incorporating specific provisions in FTP. However, it shall not be obligatory or mandatory on the central government to disclose reasons. It's not mandatory that they should disclose the reasons for not incorporating the views, suggestions and comments or feedback. Okay, that will has the potential to or will adversely affect trade relations with any foreign country, would adversely affect food, economic or national security of India, is in conflict with any government policies, strategic programs, international obligations or commitments or long-term plans, and would undermine the objectives of such policies or programs, addresses matters unrelated to trade or serve narrow, private or special interest detriment to the interests of country or broader public interest, and would require disclosure of confidential or classified information. So in these cases, these are the reasons. Remember, in that cases, they won't accept the suggestions of the stakeholders. However, nothing shall confer any legal right whatsoever on any person to seek reasons for his views, comments, opinions or feedback not being incorporated in the foreign trade policies. So fundamentally, this amendment has been made in FTP that they can seek their views, stakeholders' views, suggestions, comments, etc. But it is not necessary that they incorporate the same views in the FTP which has been so amended, and they will not accept their views of the stakeholders when it is adversely affecting the trade relations with any foreign country, it is adversely affecting food, economic and national security of India, or say it is in conflict with the government policies, strategic programs, international obligations, commitment or long-term plans, or to undermine the objectives of such policies or programs, or it addresses matters unrelated to trade or serve narrow, private or special interest to detriment of or country to the broader public interest good, and would require disclosure of confidential or say classified information. So this is amendment relating to FTP which we have discussed. So all this was the total amendments of GST which will be applicable for September 25 exam.